I am fully vaccinated and the Malaysians are on the way of achieving 80% of their vaccinated population target. So what's next? The first thing that everybody likes to do when the world opens up is of course travel! And one of the best companies to thrive in this condition, AirAsia. Tony, everyone can't wait to fly. So, how do you think the situation will be for AirAsia and the prospects of investing in them? Let's analyze. Let's have a glance on how badly is AirAsia affected because of the pandemic. Till this date, AirAsia is grounded around 90% of its 200 plane fleet across Asia due to COVID-19. And Malaysia, of course, with the largest market, which is around 105 planes, is currently under lockdown as well. The Malaysian government has not come up with an exact date when it will open up its domestic travel nationwide. So, with the tourism and aviation industry brought down to its knees, curb the COVID-19 spread, Asia has no other choice but to consolidate its resources and survive the pandemic. So, according to the AirAsia officials, if the interstate travel ban remains, the company would have to dismiss more of its employees, adding to the 3,000 of pilots and staffs which already hit by the measure. So, despite of all the safety measures taken by the company, the lockdown has indeed taken a toll on its business. So, AirAsia's finance is clearly hurting. It has suffered a net loss of 5.1 billion ringgit in 2020 compared with a record profit of 2.1 billion in 2018. So dalam masa 2 tahun saja, daripada 2 billion ringgit untung, sekarang dia sudah jadi rugi 5 billion. The recent revenue also fell by 75% from 12.4 billion to 3.1 billion ringgit. In addition to that, the AirAsia X is also in the midst of restructuring its debt. And the analysts are forecasting that the company would not be profitable until 2022. But what interests the most is the potential for AirAsia to play when the economy opens up. Who doesn't want a vacation, right? Siapa tak nak pergi bercuti, betul? Imagine the beach fronts, the hilltops, the historic places, the food hunting. Oh, bestnya. Hold it there. Let's come back here. Yeah, betul lah. The first airplane that you will go for is of course AirAsia, is it? Thank you, AirAsia. Here comes the best part. How do you think AirAsia's share price is doing at the moment? Jom. AirAsia's share price has been closely watched since the early of 2020 when the recovery team actually comes into play. The share price was around 1 ringgit 70 cents during December 2019 and it has fallen down to 68 cents of the March 2020 before rising to the current level of 80 cents. Thanks to COVID-19 vaccination progress and also due to the investors' optimism on the recovery of tourism and aviation industry. Sekarang kalau kita tengok, share price dia actually berada di support and the share is gaining popularity among investors. Tiba-tiba mereka suka pula Now, here is something that you have missed. Recent reports suggested that the group's foreign shareholding percentage has actually jumped over 20% this year. 26% to be exact. So just for information, in 2018, the foreign shareholding actually stood at around 38% before dropping to 15% in 2020. So maksudnya, foreign investors are actually buying the shares of the company. Not only that, the recent increase in the cash flow also indicates a healthy sign of recovery. And usually, this is a potential yes for the value investors. So looking at the price rebounds in the recent weeks, investors are actually paying attention to this share because of two reasons: economy reopening and possible interstate travels. Semua tak sabar nak travel kan? So, what do you think the management is actually doing to survive this pandemic? AirAsia currently targets to raise 2.5 billion ringgit from potential investors and loans. So, the company's boss, Tony, is also very confident on the fundraising process, especially in their key markets such as Thailand, Indonesia and Malaysia. So, most recently, AirAsia has actually raised around 250 million ringgit from a recent private placement of 20% of its shares. Oh yeah, lend more money to make more money. Sama policy. If you're new to AirAsia stocks, you need to hear this. So to bolster the pandemic effect on the company's performance, AirAsia has actually diversified its business in digital and non-passenger airline businesses. This includes fast food restaurants, food delivery and courier services. And mostly they're actually heavily investing in digital business, mainly in AirAsia Super App. Kalau belum dengar lagi, sila Google. Yes, they are actually diversifying into other businesses. Foods, AirAsia Shop, AirAsia Food, AirAsia Fresh. So of course lah, ada ramai pihak yang cakap, okay, your core business is flying, but since you're not flying, you're actually raising funds, open up other businesses which you're not familiar with. So there are a lot of parties. Some parties are saying that it can be successful, some are saying that it may lead to deeper depths. But their officials came back. They said that, hey, come on, this is actually our future plan. We are supposed to take 3 years for this transformation. But thanks to the pandemic, we have cut short this process to become 6 months only. But the main question remains, have they diversified too far from their core business? Because little that people know, the businesses that AirAsia is trying to venture has heavy competition. We are talking about a multi-billion-dollar business, and AirAsia is just taking its baby steps into it. Come on lah, dia kena lawan dengan company macam Lazada, Shopee, Amazon, Grab, Foodpanda. See, people don't realize that going digital can actually come with a high capital expenditure, which involves in setting up data centers and other digital infrastructures. It also comes with the ability to reproduce digital offerings at low marginal costs and lower prices for the consumers. Dia macam satu business yang akan bakar duit lah. So, lagi banyak duit yang kamu ada untuk bakar, lagi lama kamu boleh stay dalam business tu. Even big companies like Shopee has not been profitable so far. So, if you ask me, yes, it's a brave move by AirAsia indeed. So, let's come to the question, can I invest in AirAsia? So, it all may sound so good so far, and especially with the technical rebound on the charts. But let's consider the risk which is involved in this. There are two main things to consider. One, the company is currently entangled with huge debts against its assets. Means that the risk of the business to collapse is actually the risk for the investors to consider. With the recent NTA of 0.6 and price to book value at negative 1.59, it is indeed an investment to consider. Thus, the ever need for fundraising for their new business ventures may subject to multiple private placements and even right issues in the future. This will further dilute the earning per share, which will lower down the share price. Second, downsize capacity. The recent downsizing activity around Southeast Asia has immensely reduced its earning potential. This means even though the economy opens up, traveling resumes, and everybody starts to fly again, the company may not be able to generate income as before unless their new digital transformation businesses do well. You see, the first step in investing is actually getting to know your financial goals and also your risk tolerance. There is no guarantee that you will make money from your investments. Evaluate your own comfort zone on taking risks. I hope this video has given you a layman view on the potential investment opportunity and the risk which is involved in AirAsia. Remember, I'm not a financial advisor, so please make your own study before you invest. Happy investing, guys. I'm Harin from DuitKu TV. See you in the next video. Bye bye.